All right, all right, all right, all right, all right, all right. So I welcome us to make proceedings with our study and understanding of the Forex market. And I believe that everything so far has been making sense. You've been grasping them. I believe that by now you understand what we mean by market trend, and then you understand what we mean by how to determine a market trend. But just to go by it once again. So take for example, this is a downtrending market. A downtrending market that we can say on the daily time frame started from here. So the market created an high, and then the market created for us a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and then a lower low. Let's change the color of that for more visibility. Let's just do black. All right, so one of the things I want to expose to us further before we then proceed is that you see this lower low, lower high thing, this new low is only valid in a downtrending market because it's closed below. When we are saying below now, actually, we often refer to the closing price. And to know the closing price of a candle, we can easily switch to the line charts. So this is the closing price right here. Follow what I'm showing you right now. Remember that these markets at this point, of course, was creating a downtrend. And remember what I taught you, that for no reason should the markets close above this previous lower high, which you can also check with a line chart. But as you can see, the markets came there, went ahead to close above it. And the moment the market did that, what does that mean? It simply means or meant that now we have shifted to the upside. We should only look for buying opportunities. And as you can see, the market gave us a buying opportunity for a few seasons. And then, since we've shifted to a buying market, based on what I've thought, the market was never meant to come below this low. Never. Never. But actually, as you can see, what happened? The market eventually decided to come back down and proceeded to do what? To close below that low. That is what first confirms that we have a break of structure, just as we had it over here. And we are now about to move to the downside. The essence of what I'm trying to bring to you to solidify your understanding of how to identify a trend is that, trust me, there are times you can have a situation that this candle, this particular one, or this one, may come as low as this point to even go below this place, to go below it, but it will not close below that point. That is why sometimes in determining the shift of a trend, you need to know how the candle that came to the next low or lower high, the next higher low or lower high closes. Please follow me. Don't get confused. It's not confusing. So I'm just trying to say that what confirms that we've broken structure, you know that we have closing price. I taught you what closing price is. And if I will shift this away from here for a moment, you see that this market came down and closed below where this one closed. So the moment it closes below it, we have a break of structure to the downside. And as you can see, based on what we drew, the market began to do what? Create for us series of lower highs and series of lower highs, lower lows, lower highs, lower lows, lower highs, and then lower lows. I hope that makes sense. Yes, it does. If it doesn't, please ask questions when we get to meet together. The same thing also for an uptrending market. Trust me, we can see a scenario whereby you see this situation now. This first white candle, this first white, you can see it came so close to this closing price. But the first white candle, this is where it's closed. Can you see that it did not close above where this one closed, the lower high? So the fact that it came that close and it was a white candle, which means bullish, does not mean we have a break of structure. It was until this other one. Can you now see this one? This is the closing price here. Until it closed above it, that was when we now had that break of structure, including with this one too. Then since the market has broken structure, you wait for the retracement and then join the move to the upside. And then the market was meant to come, never closing below this level. But unfortunately, I don't even know which one this one is. It's closed below it. Now we've shifted to the downside again. So I'm saying that this new lower low that we have now is a valid lower low, because at the end of the day, the new move that came below this low ended up closing below it. Let me take this one off. Is it making sense? So we are saying that a new lower low, let me also take this off, is only valid because markets ended up closing below the previous lower low. Are we getting it? Of course, in this case, this was an higher low that the market was meant to respect, but it got violated. And since it has been violated, let me zoom in a bit to make that good. Since this place has gotten violated, the market came, created a lower high. It's closed below this low. This makes this new low a valid lower low because it closed below here. And then makes this next low a more valid lower low because what? It also closed below this low. Making sense? And then makes this next lower low only valid because what? It has closed below this low. So often we deal with closing prices though. Don't get it confused that I'm sticking it to the week. When it closes below the week, it makes it stronger. But when you look at this particular candle, this one, the closing price of this one is definitely lower than this, because if we switch to candlestick, you can see that that is the true closing price. And when you check for that candle, you realize that it already closed below it from here. So from here, we already had that break of structure to continue the downtrend. So maybe we should just, let's just use the closing prices for much more solid understanding. You get it? So this becomes a valid lower low because this new low has closed below this previous low. And then this new low has closed below this, and then this new low below this. So same thing for an uptrending market too. Let's look for an uptrending market that we can easily relate with. All right, so this is a market that trended to the upside for a short period of time and then went back down. Let's just pick it from here. So the market gave us this low, this high, this low, higher low, higher high, higher low, and then higher high. So what I'm trying to solidify in your understanding is that these points, you can see, take for example, now this is beautiful. In fact, this is a very perfect example. This is that previous high that the markets created. And thank God this is the daily time frame. We can cut out price. So what I'm saying to you is that Imagine this is where we are currently on the charts. Can you see that this market went high above the previous high closing price? This is a bullish candle. Remember, it opened below, closed above. But when it closed, even as a bullish candle, can you see that it did not close above this closing price? When you check the line chart, you can see it did not close above it. So even though it came so close that this week, this is still price moving, but this is where price ended up closing. It is the close of price that we used to know a break of structure. So the fact that markets came that close, but did not end up closing above, is not a break of structure. No, we only had a break of structure until good. Until we now out this new one that closed above that point, and then this one, and then this one. Then we had to wait for the retracements and then follow it to the upside. Amazing. And so we are saying that for this upside too, until we see a daily candle, this is the daily time frame, remember, that closes above that point, we don't have a break of structure. So amazingly, this one closed above it. We had a break of structure instantly, and the market did what? Zoom to the upside. Do you get that understanding? It is important that that understanding is finalized in our mindsets, even as we trade. Sorry. Okay. All right, so let's make progress. Having understand how to identify a trend, how to identify a shift in trend, the next thing we now need to look at is that, okay, all these things, how does it make sense? How do I use it to take a trade? How do I analyze the markets? And now this is where coming into another form of technical analysis proper. And then we'll be considering some technical analysis tool, which includes the support and resistance, and then the Fibonacci retracement. We may not talk extensively about this Fibonacci retracement now, but one we would definitely talk about is the trend line. So what is a trend line? A trend line is, let's try to use Google again, our friend. What is trend line in Forex? So the trend line is a line that connects price points to show market trend and potential future value for currency pair. Trend lines can help traders make decisions about when to enter and when to exit the market. That's very correct. Let's check this. This is a line drawn over pivot highs or pivot lows to show the prevailing direction of price. Awesome. That is correct. So what trend line means is that it's a line that you can use to connect a trend. For example, you can see that the market was moving in an uptrend, right? The market was moving in an uptrend right from this point up to this high before the market came back. So what trend line does is that you can draw a trend line that can help you connect how price is moving. Are we together? Over some strategic points where you maybe see that, okay, price seems to be connected across these points. So the thing about trend line is that trend line can almost be drawn starting from, in quotes, any point. But note that you only draw trend line in respect to the trend. So take, for example, this is a downtrending market. For an uptrending market, you draw the trend line to connect the lows. And for a downtrending market, you draw the trend line to connect the eyes, because that is what the market is doing. The market is moving in a downtrend. But as we make progress, let's talk about what we call support and resistance. We are still coming back to this trend line, because to now understand the concept of trend line, you need to know what support and resistance are. But know that trend lines are vertical lines that can be drawn on the chart, like we see, to connect price points and then to help us know towards what direction price may be going to in the future. Like the name implies, trend line. You draw that line to connect the trend. So now, let's talk about support and resistance. What are supports on the charts and what are resistance on the charts? So like the name implies, and like I'm so sure you must have read on Baby Pips, so I really don't want to waste too much of time. Support is that region where price gets to and it supports price to go back up. And resistance is that region where price gets to and it resists price from going further. That's how simple it is. So support and resistance can be used in trading the markets to know where to enter and most likely where to come out from. I believe it is making sense, and I believe that we are following what I'm trying to say. Let us make it make more sense for them. So support is that, okay, this market is currently buying, yeah? It has closed above this high. Now we have a new higher high. So the fact is the market came to this point and went back up. This region will be called a support. Let's forget about connecting more lines together now. This region will be called a support. Why is it called a support? Because it is a point where when the market was coming headlong, price found support there. It's pushed, price got there, and unfortunately, price could not break lower, and then it pushed price to go to the upside. That's a support. Take another example too. Markets got to this point, also this point, right? And began to come down. It's the thing about support and resistance is that they are invincible. You don't need to see it, but they are just there. So, long story short, to make it simpler for you, any place price got to, when price was coming down, any place on the charts that price got to and it bounced back up is a support. And any price as price was going up, it got to and began to come down is a resistance. That is why the market cannot keep going and going and going and going either to the upside or to the downside. So Coco is who creates support and resistance. It's often traders like us, but these are people that have the ability to shape and move the markets. So one thing I just want you to understand, first of all, primarily, is that you see this market. Let me take this off. Starting from here, you get the market was coming, got here, could not able to go further, my dear. That's a support. The market went up, got here, could not able to go further for the moment, and then it turned down. That's a resistance. Why? Because it resisted the price from going further. Let's give that one a new color. That's a resistance. As the market was coming down, this higher low, what we know as a higher low, got to that point, right? And then it could not go further up. That point is a support. The market went high, it kept going and going and going, but eventually got to this high and could not go further above that high. That is a what? That's a resistance, meaning that there is something at that region that eventually resisted the price from going further. And then the market did what? Came after it found resistance here, it came a little bit to this point, found support here again, a support that price could not break beyond to go further up. That's a support. So what I'm saying is that any point that price got to, that price could not go further higher or further lower, that's either a support or a resistance. So that point that price got to as it was going higher and could not come down, and could not go higher rather and came down, that's a resistance. And then that point that as price was coming down, got there, could not go beyond it, that's a support, and it went back up. So remember I said there is something about support and resistance that you need to understand in order to now understand trend lines. So trend lines are now also forms of dynamic supports and resistance. Take note of that as we make progress. We know that support is where price gets to and it continues to buy up, and resistance is that point that price gets to and it continues to go back down. Isn't it? Good. So the next question is, how does this make sense? How do I use it to trade? So the idea now is that, you see, the fact that price came here and found resistance on a one time is not enough to now define that place as a strong resistance. So the law of support and resistance with trend line is that for you to use it to take a trade, at least price must bounce off that region twice. Take note of what I'm saying. That for a support or resistance, let's write that down. For a support or resistance to make sense, to consider it to make a trade decision, price must bounce off that region at least twice. Yes, yes, yes. That's the rule. That's the law. Because the way we trade is that there's a kind of strategy that we trade that, in all honesty, trust me, people may call it different names, like maybe all these ICT trader, they might call it things like order block, breaker block, repulsion block, imbalance, all those things, which we will still talk about in a way. But I have chosen to simplify it by saying that, take for example, in this situation now, let me show us something. In this situation, let me check if the market got to this red candle. The market did not get there. Let me look for another example. All right, so in this situation, this is an order block. You don't disturb yourself about what it means, but this is what, according to ICT, defines as order block, which I don't have the issue, which I understand the concept and I use it to trade. But what I'm trying to say is that since it is an order block, one thing is also certain too. Markets got inside this order block and the market could not go further. So what does that mean? That also means that the market found a resistance inside the order block. Does it make sense? So in my own dictionary, to make it make sense inside my head, all of us are still trading support and resistance. But the only difference is that we have been able to have deeper understanding into why the market will move at some supports and it will not move at some supports, and it will move at some resistance and it will not move at some resistance. I hope I'm making sense. What I'm just trying to say is that this place, some people call it order block, but as much as my head wants to make things simple, what I will say is that this is an order block and price could not penetrate above it because price found a resistance inside the order block. So for ICT traders, I'm saying so peradventure you've stumbled across some of their content before, which I use. Take note of what I said. I use it. This is an imbalance. And the thing about imbalance also is that they say imbalance also acts as support or resistance for price, meaning that the market in coming to create the lower high got into this point and came further. I'm already showing you things that we look out to on charts that can let us know where we think price should get to before continuing further. But don't stress yourself with that. So I'm just trying to bring a balance to a perspective. So what I'm just trying to establish to you is that, for example, now the fact that, because I'm so sure that you read on Baby Pips that you buy at support and then you sell at resistance, isn't it? But I'm now saying that the fact that this place is a support does not mean that the next time that maybe price now comes there, you should say, Bagam, you want to buy. No. A support only makes sense for a buy if price has bounced off that region at least twice. And then a resistance only makes sense for a sell if price has done what? Bounced off that region at least twice. So this is how we trade support and resistance, either static support or dynamic support. What do I mean by dynamic? It is dynamic support that we call trend line. Why? Because a dynamic support is always moving, but a static support is always on one point. So let me give you an example of a resistance. You know, this is a selling market, isn't it? This is a selling market. My own eyes can easily identify them because I've been in the industry for long. But don't get it twisted. With time, you also will be able to identify them. So this is a dynamic, this is a market. The market got here the first time. You know, let me just label that. And did what? Sold. The market came close to that thing. Now, before I explain further, let me solidify it in your understanding that support and resistance is not just a straight line, you know, a straight line like this. No. Support and resistance is often a zone, is often a bunch of areas that could be any amount large. Does that make sense? So what I'm trying to say is that, how do I say this to you? Support and resistance is not just this one line. Even though it looked as though that is the area price got to and price bounced to the downside. But I'm saying that support and resistance is not just one line like this. Support and resistance is often made up of what? Of zones, like this point. So support and resistance is not a price line. Support and resistance is often a zone. So remember I talked about price bouncing off a point multiple times. So this is when we can call this kind of a place a resistance. What does that mean? Ideally, price got there the first time, could not go higher. You can't know a support or a resistance until price begins to react. So that's why we wait for the market to see what the market is doing. And remember, this is a daily time frame. When you go to the 4-hour time frame, it will make more sense because there will be more space amidst that place. Don't get lost. Just follow me. I'm trying to connect so many dots together to remember what I said. That, can you now see that on the daily time frame, the markets bounced off that region once. But you can see that on the 4-hour now, even at this region, we have more context, which is that, look at all this region now. Can you see it? That price came here the first time, but that means price found a support according to what I taught you. Price came here the second time, but found support according to what I taught you. So that means that the third and fourth time, if price comes back there is every probability that price will find support again. So this is the first time. My network is acting up again. Abi, Chineke. That's network. Ah. Oh, Lord.